Hello everyone, I'm Dr. Stock, and in this video we're talking about the markets. Where are they going to go today? Where are they going to go tomorrow? What do they need to do from their current levels to send us back upward? Those are the things that I want to talk about, and we'll look at what catalysts we have, if any, coming up throughout the rest of this week, throughout next week. Is there anything before Q1 earnings hit us that we can look forward to for the rest of March? That's what I want to talk about in this video, and on my channel it is my goal to bring as much news, information, and opportunities that I can find in finance and in financial markets. So along the lines of financial opportunity, check out this offer from Moo. By using my link found down in the description, you get 17 free stocks. All you got to do is open an account and deposit $100 or more, and that gets you 7 free stocks just for $100 in the account. Still your money, free stocks on top of it. This offer does expire at the end of next week, so check it out before time runs out. If you deposit that $1,000 or more, you get all 17 free stocks, 2 AI draws, and then 15 free stocks that are valued up to $2,000 a piece. So don't squander that opportunity, and thank you for the support, and thank you for supporting yourselves. Also, do yourself a favor down in the description, find that link for the Patreon, click sign up, get access to my Patreon exclusives if you'd like to hear more of my commentary, and if you'd like to interact with me and my community members, there's also a private Discord over there that you can find as well. Come on over. We'd absolutely love to have you. That link for the Patreon is down in the description. That said, I'm Dr. Stock, Doctor of Education. Let's get right into the content. All right, let's move right into the markets here. What we're looking at is the SPY, and this is the daily chart for the SPY. There we go. And you can see this trend line that I have drawn on here. Pay attention to the diagonal line right here. This is what we needed to break above, and we did. Let me put the crosshairs up. So this was on the 21st, the day before Jerome Powell came out and told us about the results of the FOMC meeting, and we actually broke above it. We had it as support, and that allowed us to have more bullish momentum going into this thing. And then yesterday, especially towards the close, we really sold off into the close. That dropped us back down into bearish territory as per the RSI, and not really a great finish for us, and it put us back under that trend line. So this, I think, is a weak area of support and resistance following along this trend line. However, it is one to pay attention to. Now, as far as the horizontals, this one that we see, the one that we failed to really stay above, is that 4,000 mark pretty much for the S&P. It's the $400 mark for the SPY that we're looking at right now. Making up above that, closing today, closing tomorrow up above that, on good volume is going to be very good for us to continue any sort of upward path that we have going in the near future, especially to close out the rest of March. So we definitely want to be watching that. If we do continue to sell off, then coming back down to this 200-day, especially in light of no real news or catalyst for us, that we really could see that come right back down. It is possible that we come back and test at 385 by the end of this week, and that would be a significant drop from where we're at. So from where we closed is 392 down to 385.7. So that's less than 2% down. It's about 1 3/4% down from where we're at. To go up from here, going from 392 back up to that 400 mark, that's 2% up. So we have a little bit more upside to go before significant resistance, and we actually have a fair amount of support below us. So it is possible that we end a little bit up from where we're at. We definitely have more upside to go. The downside, we're going to have to watch that as it plays out. There is that 50-day creeping in on us, but by the way, that 50 days really darn close to that 400 mark. So really, I think it's a wash between the two of them. Let's move over to the Qs and see what support and resist looks like for that. There we are. So I got a trend line on this one too, actually quite a few of them, but this trend line that we have coming down here, these are the most recent lows. And again, we had that really strong trading day the day before the Fed meeting, and that put us back up above that line. We actually opened at right about on it and then closed above 309, which I felt was very important for us. We actually peekabooed up over the 313 mark, and that was huge to be there for that little while. And it really looked like we could go back and test those previous highs that we had. Let me zoom out a little so we can see that. So once we break 313, that is where the next high that we really have to take on is right here at 319. And then all is gravy. We have pretty much clearance to get pretty close to that 330 mark, which would really be significant for showing that we've broken out of a bearish trend and started moving into a bull market sort of scenario. So we're going to have to see what comes for us under these conditions that we have. Let's zoom back into more recent price action, and you can see the day the Fed came out, it dropped us back down below that trend line. So now we have it as resistance instead of support. Again, I still think it's fairly weak. We have room for about 1% to get back up to that 309 mark, and I think that's going to be heavier resistance for us. And the important thing, if we're going to continue to rise up from here, is that we make it back up above 309 and hopefully retest this 313 to close out the week. So we want to watch for that to happen as well. If we do fail to break resistance, we have room down to 300, so about 2% down for fairly significant support. We get really, really super strong support between this trend line and the 50-day, that's a significant amount down from where we're at right now. That's $11. That's close to 4%. I don't see that happening from what we have. So for the markets, we actually have, I would say, we have room for about 2% down. And if we're going to travel up from here, we got room from 306 up to 313. We'll just call it about, I know it's more like 314. So a little over 2%, I would say, that we have to rise back up. We have a little bit of resistance to break through to get back over there, but settling around 309 could actually be a very decent likelihood for us. That's how we could close the week. We're going to have to watch and see that. Now I do have, let me jump over to, there we go. We're going to bring this view back up, pop this up for you. So we have the Chicago National Fed Activity Index coming in at negative 0.19. So that's below trend growth for February. And that's not huge as a one-off. And I can show you the chart for that in just a moment. So that in itself, it's not necessarily a great sign, but it's not a huge negative red flag sign that's going to completely jolt the markets either. And I'll show you that in a moment. So initial jobless claims still coming in a little bit below the forecast that Trading Economics had here. Building permits up a little bit. Continuing job claims up just a tiny bit. Not real significant. Building permits actually fairly significantly up here at 15.8%. And then jobless claims we have coming in at about the right number. So let me just show you this one because I think this one's interesting to look at as a chart. So you can see we have more of this yellowish color where we'd have below trend growth than what we had for the blue. And it's not really until you go out. I like the column charts for these. There we go. Looking at the 25-year span. So here's after the dot-com bubble where you actually had significant above trend growth. And then look at this below trend growth as we ran into recession. Then look at the Great Recession. This is what you see. It doesn't really matter, yellow or blue. They both, well, you can see the significant growth areas when there's a pattern, an extended pattern of above trend growth. You can see what happens with recession, like with the Great Recession here at below trend growth. So then you can see in between we had lots of mixed colors, and then you can see the pandemic happen, and then you can see a bunch of the above trend growth that we had as we settled in. And the nice thing is that we are settling into that above trend growth, but not necessarily so rampant like we had before. So it could be a really good case that we're seeing inflation start to subside because we don't see a lot of that serious demand and growth coming in with it, especially coming out of the pandemic. So if we go more recently, you can see that smoothing out that we have. And so it's not all that significant. If we start to see some really super negative numbers, here you get to see with the pandemic what those really negative numbers look like, especially a pattern of them. That's when you really start to get cause for concern, and we just don't have that right now. So moving on from there to what else is coming up. We got more about new home sales coming out before too long. Durable goods, watching for, do we get actual growth there? Month over month, is it going to be above the previous of negative 4.5? Consensus is saying so. Forecast is saying so. So if that is surprises to the downside, that could be something that is weighing on us. If that's to the upside, that could really help, because saying that the durable good order there, that demand is strong, that could be a boost for economic activity. We're going to have to watch as those numbers come out for us. And then let me see, Fed Bullard speech, 9:30 a.m. So right at market open on Friday, that could be a small catalyst for us, although I think we got the big one. And then the Baker Hughes rig counts and oil counts, that's also going to be indicators of expected economic activity for us. So we want to watch that. To close out March, so let's just take a brief look through next week. So here's Dallas Fed Manufacturing Index, and we had contraction. The forecast is for more contraction. So that's something that we want to watch for. So you can take a look to see that sort of contraction that we got from Dallas Fed. That doesn't necessarily tell a good story, because that is a pattern of contraction that we have there, that we don't have that growth in that index. Moving on from there into Tuesday, retail inventories, goods trade balance is going to tell us a lot about GDP and what to expect there. There we go. Thursday, initial jobless claims, GDP. That's going to be big to hear about that. That'll be the final reading that we get for GDP for Q4 2022. Originally, this came in at 2.9. Now it's down to 2.7. If we get another downward revision on that, and that's something that we absolutely want to watch for Thursday. So that could be one of the biggest things that we have is a week from today, watching at 8:30 as that GDP growth rate comes out and seeing, did we hold tight at 2.7? Did we go back up with the revision, or did we pull back from that revision to have a slower growth than expected with GDP? That's going to be really telling for us when we watch that come out. And then moving down from there into Friday, we get personal income and outlays. So that's going to be also telling about the consumer and also about inflation when it comes to, where's the PCE at? And let me see, core PCE price index month over month 0.6. We want to see that come down. You can see in this little pop-up chart here that it was trending down for the last little bit and then back up. And then overall PCE, you can see came in at 0.5. When you see both of those numbers cook down a little bit, now they are highly correlated to what we have for the CPI. So let me summarize. If we break back through resistance today, have it as support, especially on good volume, that can be very good for us for closing out the week in green. If we fail to break that resistance, I think that we end the week for the market a little bit lower. For next week, your eyeballs should absolutely be on GDP. We're looking for an upward revision for upward pressure in the markets. If we come in at the same, it's not a drop, that could still be upward pressure in the markets. If we come in at lower than expected GDP for the final reading for Q4 2022, below 2.7, that is downward pressure for the markets. I think that is the thing that is really going to, is the major indicator, I should say, for where the market ends next week, ends March. I think there is a good case for March to be a decent finish for us. I still am apprehensive about earnings and the guidance that we get from the corporate earnings. And, well, we're going to have to see how they play out. I've said before, I have my short hedge built out just in case we start to see a significant downtrend, and I have my long positions just in case we are still moving onward and upward, or maybe we get a sideways trading environment. We're just going to have to wait and see. So that's what I have for you guys today. If you like my commentary and you want to hear more of it, please check out the link down in the description for the Patreon. Click sign up, get access to my Patreon exclusives and access to my private Discord community where I post my buys, sells, and you can interact with me and my community members. We'd absolutely love to have you over there. Also, do not forget about that offer from Moo to sign up, make your deposit, and get your free stocks. Why not take advantage of that offer? Not only are you supporting yourself by getting pretty much free money, but it also helps to support this channel for me to bring as much news, information, and opportunity as I find in finance and in the financial markets. Thank you guys for watching. Click the like button, hit the subscribe button, ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.